Why do more of what works and less of what does not? Welcome, traders. If you've ever felt stuck in a cycle of inconsistent results, overwhelmed by endless strategies, or frustrated by repeated mistakes, this video is for you. We're diving into a powerful yet simple principle embraced by successful traders. Do more of what works and less of what doesn't. A mantra coined by the trader Steve Clark. Simplifying the complexity of trading can be transformative. In this video, we'll provide a step-by-step guide to help you identify what truly works for you, eliminate ineffective habits, and build a personalized system designed for consistent profitability. Let's get started. Trading often feels like stepping into a maze. There's no shortage of data, strategies, indicators, and opinions competing for your attention. Many traders, especially those starting out, get lost in this maze. They may experiment with new strategies every week, follow market noise, or let emotions dictate decisions. But here's the reality. Success doesn't come from doing more. It comes from doing the right things consistently. Overcomplication leads to repeated mistakes, wasted time, and emotional exhaustion. Think about it. Have you ever stuck with a failing strategy just because you felt invested in it? Or let emotions like greed or fear cloud your judgment? If that sounds familiar, don't worry. You're not alone, and there's a way out of the maze. By focusing on what works, cutting out what doesn't, and simplifying your approach, you can stop spinning your wheels and start making real progress. Let's begin with a crucial question. What works in your trading? The answer isn't the same for everyone. What works for a scalper might not work for a swing trader, and what works in trending markets might fail in a range-bound market. To figure this out, start by reviewing your past trades. Look for patterns in trades that were profitable or aligned with your goals. Ask yourself these questions. What strategy or method was I using in my successful trades? Did I follow a specific indicator, a price action signal, or a fundamental analysis insight? What was my mindset like during these trades? Calm and focused or rushed? For example, let's say you noticed your moving average crossover strategy worked well when markets were trending upwards, but you only applied it sporadically. It's time to double down on that strategy, refine it, and make it a cornerstone of your trading plan. The key here is honesty. Be objective about which strategies consistently yield results, rather than clinging to approaches based on hope or excitement. Just as important as knowing what works is recognizing what doesn't. Many traders hold on to unproductive habits and strategies because of emotional attachment or fear of missing out. Review your trading history again, but this time focus on your losing trades. Ask yourself, was there a consistent pattern or setup that led to these losses? Did emotions like fear, greed, or impatience override my decisions? Was I influenced by outside factors like market chatter or unreliable advice? For instance, you might notice that jumping into trades without proper confirmation caused unnecessary losses. Or perhaps you often stayed in losing trades too long, hoping they'd turn around. These are classic examples of actions that don't work. The good news is that once you identify these patterns, you can begin to course correct. Eliminating harmful habits is just as powerful as reinforcing good ones. By now, you've identified what works and what doesn't. The next step is to create a trading blueprint, a personalized plan that helps you replicate success while avoiding past pitfalls. Your blueprint doesn't need to be complex. Start with these components. Your core strategies. Document the methods you've identified as consistently successful. For example, if breakout trades in high-volume stocks are your strength, outline the criteria for entering and exiting those trades. Rules for avoiding mistakes. Write down the habits or setups you've committed to avoiding, such as trading during high emotional stress or entering positions without clear confirmation. Daily or weekly workflow. Structure your trading routine to align with your blueprint. Include steps like reviewing the market, preparing your watch list, and reflecting on trades at the end of the session. A well-constructed blueprint keeps you focused and prevents you from falling into the trap of trying too many new things at once. Over time, refine this blueprint as you gain more insights about your trading style. Even the best blueprint can fall apart if emotions take control. Fear, greed, and overconfidence have sabotaged countless traders. But with practice, you can learn to manage these emotions and trade with discipline. First, recognize that losses are a natural part of trading. What separates successful traders is their ability to stick to their plan, even after setbacks. For example, if your blueprint says to cut losses at 2% of your capital, you need to follow that rule without hesitation, even if it's emotionally painful in the moment. Here are some practical tips for developing emotional discipline. Set stop losses. Predetermine your risk on every trade to prevent panic-driven decisions. Take breaks. After a streak of losses or stressful trades, step away from the screen. Giving yourself time to reset can improve clarity. Focus on the process, not just profits. Instead of obsessing over how much you're making or losing, evaluate whether your trades align with your blueprint. Success is a product of execution, not short-term results. By staying disciplined, you can trade with a calm, focused mindset, the foundation for informed and rational decisions. Let's talk about efficiency. Not all trading activities are created equal. The truth is, a small portion of your efforts likely produces the majority of your gains. This concept relates to the Pareto principle, or the 80-20 rule. 80% of your results often come from 20% of your efforts. Think about your trading workflow. Are you spending too much time analyzing irrelevant data or jumping between strategies? Redirect that energy to high-value activities, such as researching new trades that align with your proven strategies, journaling and reflecting on past trades to identify patterns, preparing watch lists and managing risk proactively. At the same time, minimize distractions. Turn off news alerts or unsubscribe from trading channels that feed unnecessary market noise. Remember, focus is your greatest ally in trading. Many traders fall into the trap of endlessly tweaking or over-optimizing their strategies. Perhaps you've added indicator after indicator to try and eliminate losing trades completely, or changed your approach after one bad streak. While refinement is important, attempting to achieve perfect results can lead to analysis paralysis, or worse, abandoning good strategies prematurely. Instead, focus on consistency. Stick with your blueprint for a sufficient time frame before making adjustments. If you see repeated losses in a strategy, investigate whether the market conditions have changed or whether execution errors are to blame. The point is to adapt thoughtfully, not impulsively. Now let's recap. Success in trading doesn't require complexity. It requires focus. By doing more of what works and less of what doesn't, you're simplifying your decision-making process and prioritizing efficient, proven strategies. Here's a quick action plan. Review your trading history to identify patterns in both successes and failures. Use those insights to build a personalized trading blueprint. Develop emotional discipline to stick with your plan, even when emotions run high. Focus on high-value activities and minimize distractions. Avoid over-optimization and trust your process for consistent execution. When you approach trading with this mindset, you not only increase your chances of profitability, but also enjoy a clearer, more structured workflow. Traders, it's time to take action. Start reviewing your trades today and begin building your trading blueprint. Success in the markets isn't about doing everything, it's about doing the right things consistently. Remember, as Steve Clark wisely said, do more of what works and less of what doesn't. This principle, though simple, holds the power to transform your trading journey. So simplify, streamline, and succeed. Let's trade smarter, not harder. See you on the other side of success. Happy trading.